They've just shut the door on physical silver. Your last chance before it explodes past 100, they've just slammed the door shut on physical silver. Not quietly, not gradually, not with warnings. They shut it suddenly, in a way that tells you they're terrified of what comes next. If you're watching this right now, you're already ahead of 99% of the world because the greatest wealth transfer in modern financial history is underway and almost nobody sees it. Not even the people sitting inside the banks. But you're about to. Something historic is unfolding. Something that only happens once or twice in a century. Something with the power to rewrite global finance, destroy fortunes overnight, and create generational wealth for those who understand what's really happening. For the last decade, analysts have warned about a silver squeeze. They called it conspiracy theories, market hysteria, tinfoil investor nonsense. And yet here we are, watching the system unravel in real time. The evidence isn't subtle anymore. It's not hidden in obscure financial reports. It's loud, visible, undeniable. The world is running out of physical silver. Not theoretically, literally, and the elites just confirmed it through their actions. When banks stop selling something they always sell, when governments shut down access to something they normally encourage the public to own, when exchanges break their own rules to stop a price breakout that isn't an accident, that is a silent scream. So now let's walk through exactly how the break happens. Because when this system fails, it will not feel gradual. It will feel instant. The first visible sign will be a sudden and violent price spike after a delivery failure becomes public. Maybe a large electronics manufacturer announces they can't secure silver supply. Maybe a solar company warns of production shutdowns. Maybe an ETF quietly suspends physical withdrawals or changes redemption rules. It won't matter which domino falls first. Once it does, confidence evaporates in seconds. The second sign will be the breakdown of the paper market. Futures liquidity will disappear. Bid-ask spreads will widen drastically. Margin requirements will soar, forcing leverage traders to liquidate. Trading halts will occur repeatedly, and exchanges will issue vague statements about volatility control and market integrity. But the truth will be obvious: the paper market can't cover its obligations. Then the headlines will hit. Media will claim it's temporary. Analysts will say the spike is irrational. Officials will reassure everyone that supplies are stable. The same script that always appears right before a collapse. And the public, conditioned to trust authority, will wait too long. Meanwhile, the real panic begins, the scramble for physical metal. Dealers will remove public pricing from their websites. Only phone orders, only wire transfers, only waitlists. You'll see messages like call for availability, allocation required, and finally, out of stock. Premiums will explode to 50%, then 100%, then more. It will not matter what spot price says because spot will no longer reflect reality. People will pay anything just to secure ounces. That's the breaking point. That's the moment when the disconnect between paper and physical becomes visible to everyone. And that is when the real price discovery begins. The illusion collapses. The veneer dissolves. A system built on promises implodes under the weight of real demand. While everyone rushes to buy, the smartest players, the ones who acted early, will be silent. They won't be rushing to the market. They won't be refreshing dealer inventories. They'll already be positioned. And they'll watch the chaos unfold, knowing that history rewarded them for understanding the pattern before the crowd. And when the dust settles, everything changes. The price doesn't return to normal. There is no correction. There is a reset, a restructuring, a revaluation that permanently rewrites the role of silver in the global economy. Because once the paper market dies, the real market takes over. True supply meets true demand without distortion. The real cost of powering civilization becomes visible, and that reality is far higher than the manipulated prices we've been shown for decades. Call it 100, call it 250, call it 500. The number is irrelevant. What matters is possession. Because when the market breaks, price becomes meaningless. You either have it or you don't. And no amount of cash will conjure ounces that no longer exist. So here is the question every viewer must answer. Do you want to be the person reacting in panic when the headlines scream collapse? Or do you want to be the person who already acted, already secured protection, already positioned to benefit when the world realizes the truth too late? Nobody is coming to save you. Not the banks, not the government, not the analysts paid to calm the public. They will not warn you until after the window closes. They never do. Because they are not trying to protect you. They're trying to prevent you from getting ahead of them. You have a shrinking window while the system still functions, while physical is still available, while premiums are still manageable, while the break has not yet gone mainstream. The people who move before the flood always win. The people who wait always lose. It is that simple. The world is about to witness the largest monetary reset in a century. The dollar is weakening. Debt levels are unsustainable. Nations are breaking from Western financial control. Supply chains are unstable. Every sign points to a moment when trust in fiat collapses. And when trust dies, the flight to real assets begins. Gold will move, but silver will explode, because silver is both money and the machinery of civilization. So take a breath and ask yourself, if everything I just said is true, if even half is true, what would you wish you had done today? Not 6 months from now. Because once the break arrives, the only thing left will be regret. You know the pattern, you see the signals. You feel the urgency, the door is closing, act now. Protect yourself, position yourself. Learn more, prepare, and don't be one of the millions staring at a blank dealer page, wondering how they missed the obvious signs right in front of them. Because when silver breaks past 100, the world will split into two groups, those holding real metal and those holding empty promises. Choose wisely. The clock is almost out. You do not cut off access to something unless the supply is vanishing and you can no longer control the price. And right now, the price isn't just rising. It's breaking the laws of the market. Spot silver, the price for metal in your hand today, has pushed above the price for future delivery. That's called backwardation. It should not happen in a healthy market. The future price is always supposed to be higher because of storage and financing. But not this time. People are paying more to get silver now than to get the promise of silver later. The message is clear: nobody trusts paper claims anymore. They want the metal, not promises. This isn't bullish price action. This is panic buying. The alarm bells are ringing everywhere, and yet most people are distracted, unaware, blind to what this signals. Because while the price charts look exciting, they're not the real story. The real story is what's happening in the shadows. The sudden disappearance of physical supply from the global system. Vaults that were thought to be bottomless are draining faster than at any point in modern financial history. Bars that should be sitting safely in reserve are vanishing week after week. Withdrawals are accelerating, inventories collapsing, claims multiplying. And now, something that has never happened in recent history happened. Major banks stopped selling physical silver completely, without warning and without explanation. When a small dealer runs out, that's normal. When 4 major national banks, with global sourcing power, shut down physical silver transactions indefinitely, that is catastrophic. This is the beginning of the endgame, and when it ends, the price of silver will not rise gently. It will detonate. Before this video finishes, you will understand exactly why this is happening, where we are in the historical pattern, why this time cannot be stopped, and why those who wait for confirmation will be too late. The door is closing. You must decide which side you want to stand on. Silver isn't just another commodity. Silver is the most strategically essential material in modern civilization. It is money. It is technology. It is energy. It is national security. It is infrastructure. It is future power. It is everything. Every smartphone needs silver. Every electric car needs silver. Every solar panel consumes silver permanently. Every data center, every AI system, every missile guidance system, every medical diagnostic device, they all run on silver. You remove silver, the world shuts off. And here's the part almost nobody understands: we're using more silver than we produce every year. And not just slightly more, dramatically more. Mining can't keep up. Recycling is nowhere near enough. Industrial consumption is accelerating exponentially, and investment pressure is now colliding with industrial necessity. Right now, governments, hedge funds, industrial manufacturers, and retail investors are all competing for the same shrinking pile of physical silver. And that competition just turned violent. South Korea's shutdown of bank silver sales wasn't about price stability. It was about survival. They couldn't source metal anymore. China restricting access to physical metals for the public wasn't risk management. It was accumulation. Russia getting cut off from Western metals trading wasn't punishment. It was containment. Everyone with power is trying to secure the last available ounces before the public figures out what's happening. Because once the public moves, the game is over. And now we have the final sign. The seismic shift that always precedes a physical silver market detonation. Trust in the paper market is collapsing. For decades, the financial elite rigged silver prices through derivatives, futures contracts, ETFs, and synthetic instruments that represent silver only on paper. A single real ounce has been cloned into 50, 100, sometimes 200 paper claims. People traded paper, not metal. It kept prices artificially low while they siphoned away the real supply. But that tactic has a fatal flaw. When too many people ask for delivery at the same time, the system breaks. You can print contracts. You cannot print silver, and the system is breaking now. Open interest in futures contracts is hundreds of millions of ounces, yet the vaults hold only a tiny fraction available for delivery. Withdrawals from registered inventories have drained tens of millions of ounces in weeks. Dealers are struggling to restock. Industrial buyers are calling multiple suppliers to locate metal. Premiums are rising. Delivery times are stretching. Inventories are drying up. And now the paper markets are showing stress fractures. Volatile price spikes, sudden halts, margin rule changes. quietly shifting settlement terms, whispered warnings among traders, desperate attempts to prevent a runaway squeeze. They know what's coming. They're trying to buy time. But time is gone. The same four-stage pattern that has repeated 3 times in modern history is unfolding again. Stage 1, silver established as money. Stage 2, silver suppressed through paper manipulation. Stage 3, physical squeeze. Stage 4, systemic break. We are deep into Stage 3. The break is next. When Stage 4 hits, the price won't step up. It will detonate. A 60, the 80, a 100 will happen so fast the public won't even react before the supply disappears entirely. And after that point, price becomes meaningless. Not because silver is expensive, but because you won't be able to buy it at any price. People holding physical metal will be the only winners. Everyone else will learn a brutal lesson. Owning something is not the same as owning a promise of something. The window is closing. We are standing at the edge of a global financial inflection that will redefine wealth. If you understand what's unfolding, you're already ahead. If you act before the break, you'll protect everything you've built. If you wait, you will regret it. And now, I'm going to show you exactly why this time is different, why the system cannot stop what's coming, and why the explosion past 100s is already set in motion. Now let's dig into what makes this moment unlike anything we've ever seen in the history of silver. Because it's not just one event. It's not just banking restrictions. It's not just industrial demand. It's not just backwardation. It's everything happening simultaneously, compressing into a singular explosive point. A convergence so powerful that no government, no bank, no exchange, and no algorithm can stop it. The first difference is industrial necessity. In the past, when silver demand surged, governments could slow things down. They could release stockpiles. They could flood the market with paper. They could manipulate sentiment. They could tighten or loosen regulations. But today, the world can't function without silver. We aren't talking about jewelry or coins or luxury consumption. We're talking about the backbone of the global technological system. Every nation racing for AI supremacy needs silver. Every electric vehicle mandate needs silver. Every renewable energy commitment requires silver. Every satellite launch, every semiconductor, every piece of advanced warfare, every communication network, every medical imaging device, all powered by silver. This demand is not voluntary. It is not emotional. It is not cyclical. It is structural. Industrial buyers don't care about price. They don't trade sentiment. They don't wait for pullbacks or analyze chart patterns. They buy whatever amount they need at whatever price the market demands. Because without it, their business, their production lines, and their national supply chains collapse. That's problem number 1 for the paper manipulators. Industrial buyers do not play the game. They take delivery. They remove metal from circulation permanently. Once silver is consumed, it's gone forever. It ends up in landfills, in microscopic circuitry, in products that cannot be economically recycled. How do you manipulate supply when it disappears permanently? Problem number 2, governments are hoarding instead of selling. For decades, national stockpiles acted as emergency buffers. If the price spiked, governments could dump metal into the market to stabilize it. Today, they aren't selling, they're accumulating. China is quietly acquiring silver the same way they've been hoarding gold. India set import records last year. Russia has been stockpiling metals for military and sanctions defense. The United States refuses to disclose the full status of federal silver reserves, and the Mint has already warned of ongoing supply constraints. When governments stop supplying and start competing, the public doesn't stand a chance. Problem number 3. Mining cannot accelerate to meet demand. Silver isn't usually mined on its own. It's a byproduct of other metals like copper, lead, and gold. You can't simply decide to double silver production because the market requires it. It only rises if base metals production rises. Yet copper mines are declining, zinc mines shutting down, exploration discovery rates collapsing, costs rising, environmental restrictions tightening. You could throw $50 billion into new mining tomorrow and still wait a decade for any meaningful increase. Meanwhile, demand is rising now, not in 2035. Then comes problem number 4. The fatal flaw of the paper market: too much leverage, not enough metal. The entire system has been built on trust. Trust that most contracts will never demand delivery. Trust that futures traders will settle in cash. Trust that ETFs have enough underlying metal. Trust that vault inventories are real. But trust is cracking. And when trust breaks in a leveraged system, collapse is instantaneous. The numbers do not lie. Hundreds of millions of ounces in open futures contracts versus a sliver of registered physical available to actually deliver. Claims so mismatched that even a tiny percentage of contract holders demanding metal can break the system. And that's exactly what's happening. Withdrawals accelerating, registered inventories collapsing, ETFs losing physical metal at the fastest pace ever recorded, retail buyers paying premiums that expose the true imbalance. The moment that too many buyers request delivery at once, the exchanges will be forced to choose, admit, they don't have the metal or change the rules. We've seen this movie before. When the Hunt brothers demanded delivery and broke the illusion, the exchange rewrote the rules overnight. They halted buying, raised margins, forced liquidations, and crashed the price. Not because the market was healthy, because they were cornered. But this time, it's not two Texas billionaires. It's the entire world. What do you do when industrial giants demand metal because they need it to produce goods? What do you do when sovereign nations accumulate metal for defense and monetary protection? What do you do when retail investors panic and start draining inventories? You can't freeze the whole world. You can't change the rules for everyone. You can't force delivery on metal that doesn't exist. And that's what terrifies the system. The silver market is a powder keg, and they just lit the fuse. The first sparks already exploded with the bank shutdowns. Make no mistake, banks don't stop selling metals unless they cannot obtain supply. If they could sell it, they would, because silver sales generate profit. Banks exist to make money, not turn customers away. If they stop, it's because they lost access to inventory and they will not admit it publicly. Meanwhile, the exchanges are acting unstable, issuing technical pauses, widening spreads, delaying settlement windows. They claim equipment failures and software errors. Convenient timing. Every time a spike begins, liquidity magically breaks down. Exactly like 1980. Exactly like every manipulated market that hit its breaking point. And now premiums are screaming the truth. When the spot price says silver is at 28 or 30 and dealers are charging 35, 38, the real price is not on the chart. The real price is what it costs to put metal in your hand. The spot price is a fiction. The paper market is a fad. The truth lives in the physical market. And here is the final signal: panic buying has started. People who mocked silver for years have begun to move. Dealers report unprecedented order volumes. Inventory listings show sold out, backordered, please call. Online sales limits are appearing, maximum quantities per customer. Delivery times are stretching from days to weeks, soon months. Retail investors, institutions, and industrial buyers are all competing for what remains. This is how every historic silver explosion begins, with whispers, then tension, then panic. And the panic is here. The door is closing quickly. You can feel it. You can see it. You can measure it. We are one headline away from ignition. A refinery failure, a geopolitical shock, a major industrial purchaser announcing shortages, a central bank confirming strategic silver reserves, a large investor demanding delivery and being refused. One spark and the dam breaks. When that happens, the price of physical silver will not climb slowly. It will gap up. It will jump violently. The market will reprice instantly. The paper market will attempt to halt trading, enforce liquidation, and cash settle against the will of contract holders. But none of it will matter, because people will be scrambling to buy metal that simply does not exist. And at that point, price becomes irrelevant. Because a market without supply is not a market, it's chaos. We are closer to that moment than anyone realizes. And the people who understand it now will be the ones watching calmly from safety, while others panic. In the next segment, I'm going to reveal exactly how the break will unfold step by step, what the first visible signs will look like, how quickly the public reaction will accelerate, and what you must do immediately to be positioned before the wave hits. Not after. Because once the crowd arrives, it's over.